All right, good afternoon, everybody. Hope everyone's enjoying their weekend. It is Sunday, February 26th, and here's our weekend prep and review where I really discuss trades taken in the small account mastery at Simpler Trading. Also, evaluate the trades, talk about our stats, which currently for last week was only 50-50. Tricky weekend, and honestly, like full transparency, if you're part of the small account mastery, you know this as well. But I did we'll call it a dumb mistake on a SPY trade, but we'll discuss that here in a minute. And it has to do with where I was in a position and wanted to open another position, but the position kind of like canceled it out. And for some reason in my head, I was thinking just open as another position. That may sound confusing, but I'll explain it here in a minute. But all right, let's get started and review what occurred last week in our trades. So far, overall, that's 90 days. Steady incline. We did take a dip. We did end up ending the week red, but not a huge red week by any means. So I'm okay with this little dip. As you can see, they happen, and then we get our groove. And to be honest, last week was a little bit of a tricky day. So let's go ahead, and here are the stats so far for the year, sitting at only 68, we'll call it 69% success rate, which ain't too bad. I would like to bump it up some, but yeah, there's a stat so far for the year to date of the small account mastery. All right, let's pull up the calendar and look where we're at. Okay, so last week, you can see pretty light week. So we were closed this day, or not closed, but the market was closed this day. And then we locked in trades here, opened another trade here, closed out some losses here, all for a net gain of $153 loss. Actually, I should write that in red, huh? Loss. All right, and then besides that, all our trades win-loss ratios was all it was 50-50, and I'll discuss it here in a minute, over our trades. So we had 2 winners and 2 losers. But all in all, losses happen. Small losing week. I'll take it, especially after what happened last week. It was certainly tricky. All right, so let's talk about what happened. All right, so right here, what you're going to see is there's going to be an SPX trade we close here. This is how TraderView logs this information. So we entered a trade here, and then we closed it right here. So that's why it's going to be here. And what this was a Iron Condor to take advantage of the 3-day weekend and to play within the expected move to the downside as well. So if that part's to confuse you as far as where trades are showing up, where they're opened anyways. So actually, since we started with that, let's go ahead and talk about the SPX trade that we did. So, and this is the alert that was sent out. So it was a SPX, 4 days expiration, Iron Condor, one position, the max risk of 600, max reward 400. And the setup that we're trading is simply all like it says right there. The expected move was 45 points, right? And the Iron Condor was skewed to the downside because I was expecting a little bit more downward movement, but not a whole lot of downward movement. And I was looking for the fire line to hold it as resistance to the upside. So therefore, it explains why I was skewing it to the downside. And ultimately, what ended up happening at the open on Tuesday, pretty close right at the open, we placed the order to close it for 50% of the credit received and ended up closing for $2. So we locked in 50% of the credit received just by holding the position over the weekend. It's a pretty, you look here where we got into the trade at the end of the day. I'll change the colors here. Yeah, so we entered the trade here, got the gap down, and then, yeah, close it out, collect that free premium over the long weekend. Relatively easy trade. I do that almost every time that there is a long weekend just to collect that longer term premium berm. Or not longer term, just extra free day. You know, the market's not going to move while it's closed. Now, let's talk about this. And like you see right here, says some errors were made, and I'll talk about it. So right here, these 2 trades. If you watch last week's weekend prep and review, we talk about this one. So this one was a 400 put calendar. I'll put cal, targeting 400 when the markets were higher. We ended up, well, the position was up about 60%, a little over 60%, maybe 64, 65%, as the market was going down. And so what happened was, is we were in this put calendar, but at the same time, as the market was coming down, I wanted to position ourselves for a bounce, which was a 400, 405 put credit spread. So long story short, and I'll break these down in a minute, whenever I entered these positions, or this put credit spread, it canceled out some of these, and so it made it all wonky, and then we re-entered the position. So it was a complete mess. Well, we'll talk about it some here. So here was the put calendar. I kind of had to roll the explanation into one thing because it like closed it one part out, had to reopen it. So ultimately, what I ended up doing was doing this. Actually, let me write this out so it makes a little bit more sense. Okay, so I'll just put 400, put calendar, and then I wanted to enter the 400, 405 PCS. Okay, so this was at a profit, and this was the new position I was opening. Well, since these have the same strikes, it closed some of my short puts that I had in this position when I entered this position. And so it just mixed it all up. And I got into this position, I think I was getting for, I believe, 257, something like that. So ultimately, what ended up happening, like I said, it just mixed up the whole thing. So what I ended up doing was just closing the whole position, right? So after I closed it all off and then ate some of the profit, I ultimately ended up locking in 413 bucks off of this position. So I did take a little bit of a loss based off of entering this trade because I did just end up like, all right, you know what, I'm just going to close the whole position. And then what happened after that, like it says right here, ultimately we exited for max loss because I entered a new position anyways, which is this one that we ended up closing for a max loss. Because we got into position, we re-entered into that put credit spread, right? After I just close it all off. A rule for me is whenever I make a mistake like that, and it's not like I make them a lot, maybe in my beginning years I did, I didn't think about that, but whenever I enter a position, say I'm like accidentally click the wrong expiration, the wrong strike, like say I didn't click the one I thought I did or whatever. A rule for me is I just close the position and re-enter. And the reason for that is because the more cute I try to be, the bigger of a loss it ends up being. So I was like, all right, we just close all the positions and re-enter it. And this time we got in for a better credit. All right, so this next one, it was 5 wide, like I mentioned. So this was the 400, 405 PCS. And we're looking for it to move off of, and I am actually wondering why my screenshot is not in here. Well, hold on one sec, because I know I have it. Okay, well, here it is. Let's just you can see how this works. So when you get your screenshots, you just drag it in, boom, bam. Cool. Now let's look at it why I got into it. So price was coming down into this monthly point of control, which we have right here, this yellow line. Oops, this yellow line. As price was coming down here and we started to get rotations off of the support after a quick downward move. So I was like, all right, we're starting to get signals. Let's go ahead and take this bad boy back up for at least a quick retracement because we did sell down hard and fast. Well, ultimately that didn't happen. As you can see, the market kept on going down. And yeah, the risk reward was good. I mean, it was there. The setup was there. Got on the short here, ended up closing it for pretty much max loss down there. And that happens. It was a short-term trade. And yeah, nothing else to say about that. The setup was there. Would I take it again? Yeah. Just didn't, the market wasn't done quite falling. But that's that trade. The review side of this today will be relatively easy to do because there's not a whole lot of trading going on, it appears. Now let's go back over here. And here is Uber that we got into the trade. Uber. Ultimately did taking a loss, but this is the way we opened it. So Uber, as the market's been selling off, it's been closing strong, right? It has stacked EMAs to the upside, right? Boom, stacked EMAs to the upside. While the market was closing off, Uber still closed green. Larger time frame histogram is blue, and it came down to the point of control. It dipped below it and it was right back above it. So it's all right, cool. We're going to hold. Moving average is moving good, and price reclaimed the monthly VWAP in the 21 EMA on the hourly time frame as everything was slingshotting higher. Well, just like anything else, if the market's going to keep falling, most of the tickers are too. And this one I just closed for a small loss. It was, right, we got in on this pullback, expecting this as a cleave here, expecting it to push. Nonetheless, market wasn't done, and we kept on going lower. So nonetheless, took a loss there. Got into position for, I'm assuming this didn't save it, but it was a, let me pull it up. Okay, so I just went in there and found the order again. So it was a 16 days expiration, 34.50, 37 called debit spread. I got it for $1.10, right? Looking for it to push higher and just scale out along the way. But like I was saying earlier, just didn't work out. Ended up closing it for 50 cents, about a 55% loss. And yeah, nothing else to say. Just didn't quite work out. Setup was there, didn't work. Tricky week. All right, so now what is next? Okay, so that was Uber that we opened here, and we ended up closing it here on Friday where we closed all our losses. And there's nothing else new to say. This is really where it is all what we did here. So, because I already discussed it on the days we opened them. So Uber, like I mentioned, took a loss there. Here is that put credit spread, took a loss there. Now this one is one that we opened up again to take into next week. So this one is another SPY position. We'll see. Hopefully this one will work out. We'll see. But it's a SPY lotto style butterfly. And what I'm doing is targeting the daily 21 EMA. So what it is we placed a 7 days expiration out of the money call butterfly to the 20 EMA. Why do I expect the price to rally? If the market is going to rally, this is the point. So you see we came down to the 200-day SMA. We're smushed right below the 50 SMA. The bear market point of control is right where we're at. And actually, I'll pull that up here in a minute. We're actually slightly above it now. And all I'm going to look is for price to consolidate and just pop up to here. If we got in for it, 79 cents. So basically, we are risking 80 bucks. Oops, 80 bucks to make 420 bucks. Now, I don't have to make the full 420. I'll be happy with closing it out at a 200 or 300% win as price moves up higher and just be done with it. But that's the setup. This is where we're holding into Monday. This is the only open position at the moment. And that is just to look for it to go back up. And I could actually break that down right here real fast. So the SPY, like I have right here, we are right at the bear market point of control. So I'm expecting this to hold. We're also right here at this 3-month point of control. So a lot of support here. This is all that means. A lot of support. We have some moving average support. If the market's going to bounce, this is the spot to bounce. And all I'm needing is a little pop up. Now this is how it looks on a risk graph. I'll show you this real quick. So we got in for 70 cents. All right, so if you're unaware, or sorry, 79 cents. If you're unaware, this is a risk graph. How does it work? Right here is your P&L. I'll change my color. So right here is your P&L, profit and loss. Here is the stock price. And then this blue line is your profit and loss at expiration. So in this case, it is this coming Fridays. And this is your profit and loss for the current day. So basically, what does this mean? So as I move the mouse around, you see how it's changing numbers here, and you see these numbers right here changing. So if price does rally up, say it just gets up to 403 by, we'll say Wednesday, you can see how it's about a little over 200% win. I'm not going to look to pin it to get max profit. I just want the price that is right here. This is where the current stock price is just to rally up into this little pocket, take a quick win, and then get out of the way. So that's how you use risk graph. I have a few videos on how to read risk graph. I think I do. If I don't, and you're interested in one, leave a comment down in the comment section saying you would like a risk graph video on how to read it, and I'll be more than happy to create one for you. But here is that setup. So that's all the reviews, or as far as the review to do. That's all the trades. That's where we're currently sitting. But like I said, red week, no big deal. It happens. But we'll just see and hope to get better next week. So yeah, that's it for now on that one. Now let's go ahead and get into the review side, or not the review, but the prep side of this video. Like, what am I looking for to unfold next week, and how do I wish to play it? And I will say, patience is going to be key, ladies and gentlemen, patience. Now, why patience? I will say I am looking for this support level to hold, but I'm cautious on it. I don't have a whole lot of conviction in it. Like, I want to believe this is going to hold, and this is going to be nothing more than, okay, we rallied up, we came down to support, we might chop around a little bit, but then continue back up. But you see, here's the next node we got to get over, and maybe come back up, chop around a little bit. Maybe we will build out that big ascending, or sorry, yeah, ascending triangle that I was talking about, maybe before we finally get a breakout to the upside, right? Some work's going to have to happen here before we can get over here. And so it has me cautious. And so my plan really next week is we'll probably do some zero DTE trading for those of us that like to do that, and then probably some overnight swing trading, meaning we'll place a trade in the day, looking to hold it into the next day, and then lock it up for a potential profit. That's probably what we're gonna have to do. Do have a few setups I'm liking, and we'll look at those as well. But those trades are going to be dependent upon the overall market. Um, we'll talk about that now. So, like I said, here's a SPY. We're here at the bear market point of control. We're at this 3-month point of control. We're at the 200-day SMA. I'll zoom in here so you can kind of see it. Where here's the 50 SMA, is the 200 SMA. Like, this is a spot, and I do think a rally is warranted at this level, right? Up to at least here. Now, what happens when we get up here? That's the question. I really don't know. That's why I'm being cautious on it, because they could go either way. I really can't see this like coming down here. That was it, and we kind of oscillate and go back up. That's one really great scenario, but I could also see this happening, coming down here, rally, boom, and then back down. So patience it is. And okay, so if this is what I'm looking at here, like I mentioned, we'll do some zero DT trading, we'll do some overnight swing trading, and then we'll also look for a few swings. And like I said, I have those, and we'll talk about those here in a moment. And here's another thing I'm pulling up right here. Another reason I am looking to be cautious. No, that's not what I was looking for. I'm pulling it up right now. Okay, so here is my sector breakdown. So for the most part, there's some things to be warranted here. Like, I do the same process every time, but whenever I'm like, I am not sure if that's going to hold, I'll wait until Tuesday or Wednesday to see how it adjusts. And the reason I say that is because these, for the most part, are bearish, the most bearish at the moment, but they're at support. So the question is it going to bounce? These right here, they're at a 0. They're also at support. So these zeros may become +1s or +2s, which means the price will go higher. And then these ones right here are already strong, but they weren't a pullback before taking back higher. So all that being said, is these are the weakest, neutral, and strongest sectors based off of how the market closed, and that's based off of moving average assessment and if they're at support or not. And so with that being said, I think for a proper sector analysis, it is going to have to wait until maybe Tuesday or Wednesday to see how the price action shakes out. Because like I said, these ones that are lower are already at support and they may bounce. These ones that are neutral are kind of already like they're the strongest, but they're kind of looking neutral. And then at the same time, they may bounce as well to the upside. And then here's are the ones that are already strong, and now we need a dip to buy into. But I do have one in XLF I like as well. So let's go ahead and break some of those trades down. So I already said my overview of the market. Here's this if you wish to screenshot it. But like I said, today's assessment of it isn't overly too convincing yet. We're going to have to wait. Overall, like I said, overall weekly plan is to do the 0 days to expiration and overnight swing trades, because price could do anything from this moment. We could rally up to here and then fall back down, or we could just bounce around like this, because I do really like the idea of this point of control holding as we hit this 200 and we bounce higher. Because if this is the most volume that has transacted since the bear market, we cannot ignore that this is potential support. I know the Fed hasn't changed anything. I know nothing else is changing, but you can't ignore the price action side of it. In my opinion, more often than not, that I have seen unfold is price action tells the story and then the news follows. I've seen that play out over and over. and then that's just like, it will, like, your price action tell you things wants to go higher, but you're like, oh no, the interest rates or the Fed and blah blah blah. And it's true, it could still go down, but you can't ignore that support, and we may potentially bounce here. So right now I am in camp bounce, but I also want to confirm that the bounce holds. I'm actually all for, if we stay above this level, I think we will just oscillate and potentially go back up. But we'll see. I don't know. All you could do is follow the price action and honor your risk parameters. All right, so like I said, that's my overall view of the overall market from looking at the SPY. Now let's look at a few trades, setups. All right, a few trades that I am liking. Believe it or not, ladies and gentlemen, I've been mentioning to those of you at Simpler that visit with me there that I'll be getting a TradingView account up and running, and lo and behold, I did, because Thinkorswim has been moving slowly. All right, so let's look at some few trades that I like. All right, so, and I'll talk about the setups I'm watching, and just because I like them here, it doesn't mean I'm going to take them right out the bat, or right out of the gates, all right? So first one is Valero. I do like the setup, and I will explain why. So first, let me move this over here, and I'll pull up Valero here first. I am a new TradingView customer, so it's going to take me a little bit of time to get used to their charts and how to use them, but so far I like it. All right, so Valero, what I'm looking at here is I like the idea of playing this bounce to the upside, and I'll explain why. All right, so right now, price has pulled back to the 50, and we're starting to hold the 50-day SMA. And the thing, though, I do have energy on the short side, but if we look at XLE here, it is down on the 200-day SMA, and that may be support, and it bounces. So if XLE bounces, I believe Valero is going to bounce. And Valero seems to be also outperforming XLE as well. But I do like sector alignment, but you cannot deny that XLE is down here at support. Oops, not a straight line. It's down here at support, looking for this to hold as support to bounce and at least retrace back up to this level. Whatever happens up here, who knows? But this little move right here could be a good play for us in Valero. So what's the setup in Valero? So like I mentioned, Valero is holding the 50-day SMA after a dip lower, closed pretty strong on Friday. And if we look at here, all right, so what are you looking at here? What are all these crazy lines? All right, so I have a lot of anchored VWAPs. So I've been finessing my knowledge on anchored VWAPs and volume profiles. It's just a new thing that I'm adding to me. Instead of like always relying on the color of an indicator or whatnot, for me, I just want to focus on price action. Like which side has the most buyers and sellers. That's how you really know which side are you on. And at that point, we just kind of paint a picture. So I do have my monthly point of control in this white line. So you see how we reclaimed it? And then here is another monthly point of control, which we pulled back to, and we're holding it here. And there's one other key thing here. So we pulled back to these point of control levels and we're holding. And one other thing I want you to do is pay attention to these lines that I have right here. So what are these lines? So I pulled the anchored VWAP from here. And the next one is anchored VWAP from here. So why are those key levels important? So basically, from this swing high and this swing low, who is not feeling any pain? And at this moment, you can see that the buyers are in control. And the reason I say that is because we have a swing high and we have a swing low. And then it calculates all that volume that transacted there, and we have to just let it calculate who is in control, and it's the buyers. And the way it's at the buyers at the moment is because we're above it. And I also put a VWAP from this swing high, and I put a VWAP down here at this swing low, and you can see we're above those VWAPs, so there's no pain being felt from the longer term time frame. And you can see that this VWAP level right here was respected on this dip down. So I took the last swing highs, and it's dipping, and it is this point of control is holding in the 50-day SMA. So this one, it doesn't really have a trigger. I kind of like this one really going up to the playing this pullback potentially on Monday. I might be a little patient, wait till Tuesday, give it a little second to shake out. But I do like for playing it up to potentially 140, if not even up to 150. It won't get to 150 until we clear 135. And the reason why 135 is because I do have a VWAP from here. that I have drawn down, which is right here at 135. So you think about it, in big picture, the buyers are in control, but intermediately from here, the sellers are in control. But if we get above here, that opens the door back to here. So in a nutshell, I do like Valero. I would have my stop below here, probably longer term targeting 150, but we'll have to see. And those in the small cap mastery with me, this is one we'll probably look to get into. All right, so that was Valero. Let's check out Etsy. And some of these may not trigger next week, and some of them I am, we'll say, cautious on, if you will. All right, so Etsy. This one probably won't trigger next week. I'm going to keep an eye on it, but if the market does start to rally, I believe it will go with it. So what is the setup on Etsy? Let me pull it over here. All right, so Etsy. Looking at it right now, you can say you do not want to go long this, which is fair. That's why I have a point where I want to see it clear in order to take it long, and I will explain why. So we're above the bear market point of control. You can see when all these dark pool prints came in a while back over here, we've been ebbing and flowing higher since then. But if I pull up this chart, what I want you to pay attention to is I want to crunch it, and I'll explain what it says right here. So first things first, is I crunch it, I have the all-time highs point of control up here, or all-time high anchored VWAP. And the anchored VWAP from all-time highs is right here. So what does this mean? So all the buyers in the life of Etsy, as it worked its way to the all-time highs, the buyers are now the one in control, because basically above it, buyers are in control, below it, sellers are in control. But this one needs a little bit more finessing. Like it says right here, I like a long trigger above this other VWAP, which I'll zoom in here and show you. And the reason I'm okay with doing it is because I want to make sure the buyers are fully in control by breaking that VWAP level. And the reason I like the bullish idea is based off of how we're above the all-time high volume weighted average price. But I don't want to get long until we clear this volume weighted average price. So think of it this way. Here is the all-time highs, all-time high VWAP, right? This line. So the buyers are in control. But right now, since this pullback, the sellers are in control. It's just such a tricky spot. I don't want to exactly hop into it and look for it just because we're above here. I want it to clear the most recent VWAP. So once it clears this high, then I will look to play it back up. I do have an alert set ready to take action on it if it does unfold that way, but if it just starts to break down and go lower, then I will scratch the bullish idea and look for a bearish idea in Etsy if it does so set up. But that's the bullish idea on Etsy. Like I said, it has to clear basically 133.84, which is where this VWAP area is, and I'll play the upside if it does clear up or push that way based off of this all-time highs anchored VWAP, and it will clear also this month's point of control. So I hope that makes sense. And if any of these don't make any sense, by all means, answer in the, actually I'll go here since I'll go up. Feel free to ask a question in the comment section and I'll be happy to get them for you. All right, so here is CLF. Let's talk about CLF. All right, same story, really. Some of these I'm locking. Let me come over here. I'll put CLF in first. Like I said, I'm not blindly running into these. I'm gonna have to look at overall market conditions before running into the position. All right, so CLF, you see how we're sitting right here at the bear market point of control. We've been kind of going sideways. We're right here at the 50 SMA. So I like the idea of this squeezing and then potentially going higher. I do understand that this kind of looks like, and oh, there you go. Hopefully y'all are still with me. My computer just freaked out on me. Okay. Sorry about that. Okay, I do understand, but this looks like a kind of like a head and shoulders. And if it does start to break down, that's cool. Then I won't take it. That's why I have a trigger to the upside. But if this does hold and it breaks below this level, I think this looks great for a push back up. And the reason for that is based off of this. Okay, so all-time high anchor VWAP, bring it on down, and you can see right here, okay, so all-time high anchored VWAP is right there. We're above it. I have a anchored VWAP from this major gap up, and I also have a VWAP from this major swing low, which all congregates right here. So you basically have 3 levels of support on the anchored VWAP. So if we're above all-time highs anchored VWAP, meaning the buyers are in control since all-time highs, but the sellers did come in right here, right? At this point of control, that's what this white line is, a point of control. Solid reversal candle came down, and now we're sitting right here at this month's point of control. But if it can clear 120, or sorry, 2030-ish, right? Clear this high, which is this anchored VWAP, that means that these sellers are no longer in control in the context of these other, or sorry, yeah, that these buyers are in control, and then we get look to push it back up again. So I like that. As one, I'm really enjoying this thought process and setup where you're like, okay, big time or a larger time frame, buyers are in control, sellers came in control right here. All right, cool. When do they not get in control? And that's where we're on this side of the line and look to move it back up. And first target would be right here. And this is the stop. So small top, small stop, big target, and let the trade play out. All right, so that was Valero, not Valero, but CLF. Next is JP Morgan. I really do like JP Morgan. XLF is looking good, and out of all the financials I looked at, JP Morgan is one that I am liking to the upside as well. It has really good structure, really good trend. It has VWAPs, it has point of control. Everything is looking great. All right, cool. So here we are right here. Simply see how we're above the 50-day SMA, we're above the 21 EMA, which is this dotted white line, and it dipped down, hit the 50, and it started reclaiming it back up to the upside. Now we'll go ahead and bring this over here. All right, crunching it down so you can see what I am looking at. So I drew an anchored VWAP from this gap up back from November 2020. And you see how the buyers are in control there. We could even throw one at all-time highs just to see exactly how that looks. There we go. Okay, so we're above that as well. All right, so we'll zoom in. So we're above the 50. We're above all the key moving averages. We're above this month's point of control. Support held. I really like this one to the upside. Sorry, I was seeing what that line is. I don't think it's anything. I think this was when I was messing with it, trying to figure out how to write in here. Okay, so JP Morgan, it's right at the earnings volume weighted average price. So if you think about it, so since earnings came out, who's been in control? It's right there where the buyers are in control. It's in a good trend higher. It came down and tested this VWAP and held, and it's above the year-to-date VWAP, which is that blue line. So there's a lot of, you just look at it, see the trend is higher, you see where you can enter your position. I really do like it going along probably Monday or Tuesday as it clears this point of control. Stop down here at the below the VWAPs, and you just let it ride. First target would be this point of control up here near 47.50. So I do like that one to the upside as well. And then I believe I have one more, and Meta. Meta may not happen. It's a little tricky, but I do have it on watch list. I'll keep an eye on it. I like it for both sides, but we can talk about it. All right. So first, let's look at Meta over here. All right. So Meta has pushed higher and stalled. Here we go. Okay. So we had a big earnings gap up, right? We're above the bear market point of control, and now we've been slowly stair-stepping lower. So this one's a little bit tricky, and I kind of like it for both ways, and I'm just going to let it unfold in front of me and play it either way. I'll wait for which setup unfolds, really, if that makes sense. So this is a HVA from the 3-month time frame. You can see it right there, kind of right here as well, and that's kind of this shaded area, this gap, right? We're right at the daily 21 EMA, and we're above this point of control. So I do like to buy the dip scenario and back up, but there's one little kicker that is happening right now, and that is this. So I have a lot of WAPs, if you will, drawn on here. But the one I want you to pay attention to is I have one drawn from all-time highs, and that's right where Meta rallied to and got stuffed. And we're below this month's point of control. But there is a lot of volume support down here at about basically 165. And these VWAPs right here, there's two. And those two VWAPs are drawn from whenever Meta had that really large gap down and right before the really large gap down. So these two VWAPs really line up right here. And that's also where this 3-month point of control is. So if this does start to hold at about 165, I do like to play back up to basically, we'll call it 190-ish, this point of control. You do have to be cautious on it because we did hit all-time highs VWAP and got stuffed, but nothing's to say that it can't come down to these larger time frame VWAPs, or not larger, but it is smaller and relative to higher time frame. But if the trend is trying to turn, you can't say that this volume support based off point of control or high volume nodes may hold. And then you look to play it back up to here and just get out before it hits this anchored VWAP again, because who knows what's going to happen. It will need to clear this level in order to keep going higher. But I do like the idea of it stalling here. We get some signals and we could have a tight stop underneath it and play it back up to that level to the upside. Now, the short side of it is it would have to break these anchored VWAPs, probably bounce off of here, hit this point of control, and then take it back down. I'll keep it on my watch list for both ways, but I do like the bullish scenario, all because I think the SPY is looking like it does want to go up, despite what everything else is saying. Like, that's just the way it looks, and I'll have a tight stop on it, or not tight stop, but I have my levels where I'm right, have my levels where I'm wrong. I'll just let them work. But yeah, that's pretty much it for things I'm watching, but I am going to keep it relatively light, or light, not like, light, and play them as they show up. But like I said, the plan this week for me is doing probably a lot of 0 days to expiration trading like I have been. Probably those are my most consistent trades. And then we'll do some overnight trades where we'll probably play the hourly time frame, looking to lock it up into the next day. So that's probably the best course of action for this week, because it's not clear what's going to happen right now. For all we know, we'll have a huge rip your face off rally right back to the 21 EMA and then get stuffed and ripped down below point of control. So that's something to be cautious on. But that is all I have for y'all. If you made it through this entire movie, thank you very much. Throw me a like, subscribe, whatever you wish to do. If you found it helpful, please let me know. But those are all the setups I'm watching. So I'm looking to trade, and we shall see what happens, because it could literally go any direction at this moment. Have an awesome rest of your night or day, everyone, and I'll see you all again tomorrow. Take care.